have on McDonald's stock, so we came here to our local McDonald's here in Richfield, Ohio, ordered a very healthy meal after I already had a hash brown this morning, so some would consider me a fat F.
McDonald's twice in one day.
Yeah, so
same store sales.
we're splitting a cheeseburger and a 6-piece nugget. Usually I'm a glutton and I eat a dinner box, but I'm being a little bit reasonable because I just had food. So check out the video, thanks. Okay guys, that was a delicious mini meal. Now let's get into the financials of McDonald's. Mo has pulled up the ever so famous 10K.
I have.
And I'm going to pull up the 8 pillars.
We'll search through that as needed.
Okay, so there are 38,000 restaurant locations in the world. Here's a question. How many are in China? So how many McDonald's in China? 4,400 and 247 in Hong Kong. Okay, so call it 4,500 stores. There are 1.6 billion people in China, divided by 4,500. That's one for every 355,000 people. In the U.S., how many stores in the United States? There are 13,500. So 330 million divided by 13,500, every 24,000 people. So that shows that China has about almost a 11 or 12 time growth potential. I'm sorry, almost a 13-time growth potential in terms of growing McDonald's. Now, of course, it's a lot more rural, a lot poorer right now, but as it grows economically, that's where McDonald's is going to see a lot of growth. Now, the question becomes, do they have the same business model in other countries they have in the U.S., which they own the land and you lease from them?
Yeah.
I believe it's 8% of revenue or a certain flat lease, whichever is higher.
Oh, okay.
Yeah.
You know people that have owned McDonald's or do.
Yeah, but I just know that from like researching it once before.
This says actually 40,031 total stores in the world right now.
At the end of 2021.
Correct. 13,438.
That's what it says right here.
Perfect.
Yeah.
That's just in the U.S.
Okay. How are same store sales going in this year over year? Let's look at the 8 pillars here. Okay.
I had to guess they would be high because of coming back from COVID. Wouldn't you think?
I don't know. It could go either way here.
So McDonald's is very much a moat.
This is so good.
Is it true that they own most real estate in the United States? Because that was in the founder.
Was it?
Yeah, it was at the very end.
More than the Catholic Church?
That's a good question. I don't know.
The Catholic Church is the most in the world.
Wow. But, I mean, this is absolutely a moat. And
This is heaven.
And it's consistent. Everywhere you go, it's consistent. Even in Europe.
Yeah, we were in Italy and London. We had McDonald's.
Mm-hmm.
I think it tasted better.
I liked it better too, but their chicken sucks over there.
Uh-huh.
Yeah, it's terrible. But they have like different things. They had like these poppers. It was like nacho poppers or something.
So the one in Italy had macaroons.
Wow.
Boy, look at that high multiple. Look at this high PE and high price of free cash flow. This debt's very interesting too. 10 times free cash flow in debt.
So in 2021, global comparable sales increased 17%, primarily due to strong sales performance among all segments because of their accelerating arches strategy. I don't know what that is, as well as recovery from COVID-19.
Of course.
Sales in the United States increased 13.8%.
By the way, decent return on invested capital, 11%.
International was 21%.
Man, look at this debt level, Mo. 10 times. They've had pretty consistent debt level. Let's go to annual, because this kind of like, ooh, look at this. Just skyrocketed. 16, 17, 18, 28, 30, 34, 36, 52, 54, 54. Big jumps in debt levels. Now, 3 times the debt. Over 3 times the debt since 2012. Let's see how revenue is since 2012. Revenue is lower.
Wow, it is lower.
Well, they spun off Chipotle, right?
Yeah.
But that couldn't have accounted for that big of a revenue drop.
No.
So remember, these are all royalties, guys. Like, how many stores does McDonald's self-own? 2,800. Oh, okay. That's actually not bad. I thought it was going to be lower than that.
So it's 2,800?
Yeah.
Okay.
Roughly. Man, that's so bizarre. Net income. I mean, look at this. Revenue is, well, here's the good news. Revenue is down, but profit's the same. Free cash flow. Let's go see where free cash flow is. Okay. Man, that's pretty consistent. $5 billion a year. Is there a way to find out in their 10K quickly what the average rate on their long-term liabilities are. It'll say somewhere in there, but I'm wondering if can we find it quickly? Just type in interest. Interest rate. What does that say? Weighted average cost of interest, 3.2%. So their average rate right now is 3.2%. So guys, if that goes up to 5.5 on $50 billion in debt, they just ate up 20% of their free cash flow. Adios, sayonara, peace out. And what's the average maturity? Does it tell you? Maybe not, but I'm sure it's longer term. I'm sure they took a lot of debt along the way. But that's it. Listen, man, I'm actually surprised by these numbers here. Mo, aren't you?
Yeah, I was actually going into this. See, I like when Tim says, let's pick a company, I always look at ones that I want to look at.
Yeah.
And I was expecting much, much better off the rip. Like when we looked at Starbucks last week, I was like, oh, this is interesting. Now this one, I'm like, oh.
Is it telling that Warren Buffett loves McDonald's and yet doesn't own any McDonald's? Doesn't own McDonald's stock?
Yeah.
This probably explains why.
Yeah, he goes there every single day.
As do I. As do I. Get a hash brown every morning. He gets a sandwich based on the market was up or down or something like that.
Based on pre-market numbers, yeah.
And look at the premium you're paying for the company. It's 35 and 38 times earnings over the last 5 years and free cash flow. If they cut off 20% of that, you're talking about 45 here.
Yeah. Be honest, when you said this was 2013, 27 billion, before I looked, I was going to say, it's probably double the revenue. And it's less.
How many stores do they have in 2000? So let's look at that.
Go back.
Stores by year. So that's something to look at. Here we go, Statista.
Yeah.
Oh.
So they're actually still opening stores.
2013, they had 35,500. They now have 40,000. That's not much growth.
I think they netted about 500 stores in 2021.
According to this, like 800, but yeah, bottom line is whatever.
There you go.
Huh. There's not much growth, guys, overall.
It's actually quite shocking.
So the point of the deep dives, guys, is when you find a company that's interesting, you go dig a little bit deeper. You start asking questions. Oh, they have a lot of debt. What's the interest rate on the debt? We haven't looked at the covenants, anything like that. Good profit margin, good gross margin. Because, guys, remember, this is franchise fees. These are, they get, it's like, I believe the franchise fees 8% of revenue. Let's look it up. 4%.
Something else I don't like, they're buying back shares at pretty expensive prices.
Yeah.
What was their PE? 39, did you say? Or something?
38 and 34 for the price of free cash flow and PE. Like, okay, listen, there's a premium to be paid for McDonald's.
Yes, there is.
But is it over double the market?
No. Not with this kind of growth.
The all-time high was 2-3 weeks ago for 281.67. The 52-week low is 217. Oh, look at this chart for 1 year.
Let's do stock analyzer on it.
Okay.
Never thought I would put negative.
No, I'm not going to put negative in there.
What are you going to do? 0?
I put 0, 2, and 4. Okay. I mean, still inflation, Mo.
I'll do 0, 1, and 3. How about that?
Okay, good boy. Profit margin, 22, 24, 26.
Yep.
Let's go 20, 22, 24. PE, 15, 17. No, 15, 16, 7. Nah.
I'm going 14, 16, 18.
That's probably smart.
And then I'll go 12.5 on the low side. Yeah, I'll just 12.5, 15, and 17.5.
I'm doing 12, 13, 14.
That's fine. Let's see.
I mean, this has got to fall big time. And it makes sense. I mean, look at the PE.
Yep.
Look at these PEs. It makes sense. It's got to fall big time.
Basically,
this is an example.
I'd start getting interested around $70, maybe.
So it's got to fall by 75%.
Correct.
And you might be watching this right now going, oh, come on. If you're new to the channel, if you're not new to the channel, you'll be like, actually, they said it before and they ended up being right on a lot of these. If you're new to the channel, we've said before we wouldn't touch companies for very low prices, and then all of a sudden they fall and there's still more to come. So the point, this was not even close to a deep dive, guys.
No, but this is the authenticity of this.
This is exactly the authenticity of it.
We do not prepare these videos.
The point is to see a live reaction of how we're reacting to the things we see and pulling back, the levels, pulling back the layers. Okay. So with McDonald's, I look at this going, how is a company that's still growing? How is last 10 years they grew their locations, but their revenue has fallen? Is it Chipotle? I mean, how much did Chipotle do in revenue when they spun it off? Because Chipotle used to be owned by McDonald's. So I'm gonna go to Chipotle. I'm gonna look at the financial statements.
Let's go back to the beginning.
Oh, wait. No, they spun off. I think they were spun off. $3 billion.
$3 billion.
I don't think he was in that. Like, when did they spin off from McDonald's?
Let me Google it.
Googly Moogly. How's Chipotle at $1,500? Jesus Christ. By the way, fun fact, Chipotle was the first stock I ever sold cash secured puts on.
Really?
Yeah. Yeah. First one I ever sold cash. It was at $400 a share or $420, and I wanted it $280 at the time. And I just collected the money. So when did McDonald's?
This is written in 2015, 2014.
No.
Probably 2015.
Probably.
Yeah.
When did Chipotle go public? 2006. Wait, what? Oh, wow. Okay. $22 a share. That's a pretty good return. It's actually, I think, better than it's better than Google was.
January 26th. Look at that.
All right, so guys, this is us being authentic. We have a community. People in there will discuss it. But you know, come to think of it, I don't see people talking about McDonald's a lot.
No.
It's probably for exactly this reason.
Yeah, it's probably there's no interest because of,
Great company.
Yeah.
Stock sucks. A lot of debt. I don't understand that debt level.
And I think this is a great example of a company that we love the product and we don't want to own.
Correct. So check it out. We have a new special on our software. It's $1 per day, but the good news is you can try it out for a month. If you don't like it, which I think you'll love it. You come in there, you use it. If you don't like it, email us, full refund, total risk-free for 1 month, and it's only $1 a day either way. So thanks very much, guys. Subscribe to the channel. Take care. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?